Look, up in the sky, it's a bird, it's a plane. No, it's Einstein and Ives, strange visitor from another planet who came to Earth with powers and ability far beyond those of mortal man. Einstein and Ives, who can change the course of mighty rivers with their bare hands, and who, disguised as Dan Ives, Einstein on Wall Street, can change the course of your life. Ladies and gentlemen, we are about to completely blow this thing up. What have we been waiting for all year long? Going back to 2024, we had to wait till September for a cut. We got surprised with a 50 basis point cut last year. We did not get that surprise this year. All bets are off. Yes, dissent amongst the ranks, a little dissent between the two of us. 25 basis point cut. There's a couple things that are super important. What is the cut, 25 or 50? The dissent amongst the rank, what did the other governors think? And then how many cuts are we going to do through this year and in 2026? And then the most important of all is, how does the market react to it? Dan, welcome, my man. You look like $1 million.
Dude, awesome seeing you, man.
Awesome. Tell me your interpretation of what's going on.
Look, me and you talked about it often.
Right.
The dissenters were ultimately right.
Okay.
Powell had to cut in terms of 25 bips.
Right.
And I think the reality is the market knew as Powell's done in May.
Right.
So regardless of what he says, his speech may be a little more hawkish.
Right.
Market knew as Trump's going to put in a very dovish.
And that was the one guy who called for a 50, correct? The new guy.
But that's a barometer for who's going to come in.
Right.
So you could argue now that the market is going to assume a much more aggressive cut path over the next year with a new Fed governor.
Right, but are you comfortable with that aggressive cut being so positive for the market? In an interest rate cut cycle, we talked about that before as well. Does that mean, is that super positive historically for the market?
I believe it's a bright green light for tech stocks and risk on.
Okay.
Because this is the
how does interest rate cuts impact tech?
Because ultimately, as you cut, it loosens up the financial system.
Exactly, okay.
Which by definition is going to add more risk. Risk assets are going to outperform.
And tech are the ones who are borrowing money, correct?
As well as any tech company that was needed to borrow.
Right.
You know, in a higher interest.
Now,
guess what they're going to borrow for? They're going to spend on
R&D
AI
and building data centers. I didn't even think of that. Thank you for that.
And that to me is an important connect the dots that's happening.
Yes.
And I think that's why I think tech stocks, the path is much higher.
Okay.
Going into year end.
Okay.
Look, me and you have talked about, remember, the S&P, the 7 hat.
The 7 hats, seven in front of the S&P.
And it just feels like we're just heading down that path now that with AI, with tariffs always looking containable,
right,
and now a cut cycle, that's bullish.
You know, I love the way you put that. I didn't even think of that, because we know that one of the biggest things that what got hit when we went from 0 to 1 to 2, way back at COVID, when we printed all that money and they had to start raising interest rates, what were the stocks that took the biggest hit? Was tech. Why is that? Because they were borrowing at 0 interest rates for R&D, for growth, and for the development of AI. Now we have the reverse cycle happening. Now we've been at this level. They've done incredible growth anyway. They are the flavor of the moment. They are the Mag 7. And now at 5.5%, going down to 4, going down to 3, they are going to be able to then once again fuel what they need to do with R&D, building data centers, and put money into AI. We know Oracle, Google, Meta, all of those guys are putting hundreds of billions into AI. That is just like, that's the revolution we're talking about.
And it's going to accelerate, given only 3% enterprises have spent on AI.
Right.
So that's all going to accelerate.
Okay, so we're in an accelerating interest rate cutting mode. That accelerating is pouring fuel on the fire. My fear was that the market was going to pull back after this irrational exuberance about, look, there are lots of reasons why we're still trading at record highs. The lifeblood of the market are earnings and guidance. We've had that solid 80% of the S&P beat. Guidance was way better than it was last quarter. That was what sort of pulled the market back in February, March, and April. However, what's fascinating is I did not know if this rally was sustainable, but you're telling me it is, and it's for a number of different reasons. Money on the sidelines. Give me your breakdown.
Money on the sidelines.
Okay, $6 trillion on the sidelines. Okay, playing catch up.
Tech spending.
Tech spending.
Fed cutting.
Fed cutting. Accelerated Fed cutting.
And then what I view is that the use cases for AI are expanding, which means you're going to see more and more tech companies spending in this area.
Now talk to me about quantitative. That was a market that was hot for a minute, Jensen came on at one point a couple of months ago and burst that bubble, right? He said it's not 10 years out, it's 30 years out. He pulled that story back. They are now hot again. Talk to me how you see that play out.
And Jensen even admitted that that's accelerated relative to what he thought.
Okay, so he did. He corrected himself. He readvised.
I wouldn't say corrected. I'd say the
reevaluate.
Reevaluate.
Okay.
And also, look, as AI tech is accelerating,
right?
Quantum's accelerating,
right? Okay, so that's key. So some of those are the secondary and tertiary derivative trades of the NVIDIA trade too, because the quantitative is definitely part of that.
Yep.
It's going to be part of the CapEx. It's going to be part of that growth. Okay, so we had a 25 basis point cut. What was your interpretation? Look, think about this. I was talking to Tim Anderson for a second. We were up at 8.5% inflation for a while. I think Jay Powell did an amazing job in navigating us through COVID, through the last 5 years, up 100% on the S&P, trading at record highs through all of what's been going on, right? 18 consecutive interest rate raises, a couple of cuts, a couple of wars, a crash in the oil market. I mean, all of this, and we're still trading at record highs. He navigated it beautifully. However, this elusive 2% inflation number, Tim Anderson was saying, you know what? It's almost like he self-sabotaged himself and he almost wanted to get fired because at the end of the day, we got down to 2.4, 2.3. Why didn't we spike the football and call victory and go from there?
Because of tariffs.
Because of tariffs.
So
tariffs made it bounce.
If tariffs never happened,
right,
he would have cut.
He would have cut.
The whole reason he didn't cut is because tariffs threw a major X variable.
Yes. Into GDP, into everything, into expenses, into the consumer.
That's why he ultimately ended up not cutting the last cycle.
And do you believe we would have gotten down to 2%? If we were in that trajectory, maybe 2.1, if we had not had this whole new tariff thing happen?
And it's a very arbitrary 2.5, right. But I think now he soft landed the plane.
Okay.
Begrudgingly cut with still a little hawkish.
With a little bit of a corollary.
And some of that is a little political, right?
There is, and I was hoping he would, he did hold his ground. He did really well. He was up against the forces of the Professor Orange, right? That's the bottom line, right? All due respect to the new sheriff in town. However, he held his ground. He waited until all the economic data was right for him to pivot at Jackson Hole. He decided to do the cuts. Do you see him? He did it in a very elusive way. He did not say, I'm going to do 2 or 3 by the end of the year. All he says is, this is not the end of you. This is not the last you've heard from me when it comes to cuts. That's how he phased it.
You get 2 more cuts the rest of the year.
Okay. Even though you've got I think it was Gunlatch said he wanted 5 more cuts. And then the new guy wanted 50 basis point cuts.
So I think under Powell, it's going to be a slower cut path.
Okay.
Then when the new person
comes. And then the new person, that's going to be accelerated. So where are we now? We're coming into the end of mid-September. We're coming into the end of the third quarter. All eyes were on this interest rate cut. We did get a cut. We didn't get what some people felt would have been a rip the Band-Aid 50 basis point cut like we got last year. Last year, the surprise of the 50 caused the market to sell off 1,000 points. It did bounce back in October, but it definitely did put a damper in the market's momentum. Here, there's no interruption of the momentum at all. Yesterday, we sold off at 2 o'clock, down to a level. It was technical. It was just like an emotional sell-off. We bounced back. We closed, if not eked out a little bit of profit. We came in this morning off to the races up 50 handles, and we were green all day long. Your feeling is that we're not going to see a pullback.
You could have pullbacks,
little bumps in the road,
with
pebble in
different
your shoe
inflationary numbers or part of the U.S.-China negotiation. But
any seasonality pullback? Are we blown through that already?
I think you'll have maybe in some September, October before earnings season. Okay. Worries about like NVIDIA chip restrictions.
Right. That was why NVIDIA got smacked yesterday, right? China decided they weren't going to allow to buy NVIDIA chips on the Huawei thing or something.
But that's also part of this game of poker that's being played too.
Yes. Okay, so we're setting the stage for, look, an S&P that's got a 7 in front of it, a Dow that's already broken through 46,000, a NASDAQ's on fire. And what do you think about the fact that they're buying everything that's not tied down? They're buying crypto, they're buying gold, they're buying futures, they're buying S&P, they're buying NASDAQ. Today, the Russell closed at a record high, small cap and mid cap, first time in 2.5 years, closed at a record. Looking for value. Talk to me.
Mid cap, small cap.
Right.
You could see catch up trade there.
Cash up trade also, and also the ones that probably are benefiting are those, a lot of those small cap, mid cap are people in the derivative trades in the AI space.
Exactly.
As well. Okay, so Dan is painting a picture of a market that's solid, a scenario that makes sense relative to the Federal Reserve. He did not count out at Trump, but there was a little politics involved. The market's on fire. Post the follow-through day is a pivotal day in the S&P 500 after Fed day, so things are looking good. We're going to come into the next quarter. Dan and I are going to do a lot of stuff. Dan's got a lot on the table here. He's a busy man. We can only corral him. He actually parachuted into Wall Street, right? This actually shirt turns into a parachute. He came in here. We couldn't put that on camera because of security, but he did parachute in for this shot. Anyway, you know what? It's a great day to be on Wall Street, great day to be in the market, great day to be Einstein and Ives. Look, up in the sky, it's a bird in a plane, it's Einstein and Ives. Boom, and that's all I got to say about that.